this is Zach Meir from Zach's Traders Cafe with a look at the major markets on Tuesday, the 20th of September. Starting off with the FTSE 100. It looks as though people are betting on no change from the Fed and basically nothing from the BOJ either. So that's good for equities and a push through the 50-day moving average at 67.74 should lead back to the best levels of the year to date, running through towards 69.55, which was the August peak. After that, on a weekly close basis, we're looking at 7,200, the top of the late June rising trend channel. I suppose if you're cautious, you could wait on this line of resistance here being broken from last month, running roughly through the 68.90 level. But really, it would appear that enough has been done already by this market as far as building a base for a new leg to the upside. Next up, we've got the DAX, which is interesting in the sense there was a very strong sell signal or a sell pattern of island top double, top island reversal there for August and September. Really, if we broke back and negated that, it would be quite an achievement by this market. So far, we do actually have an inside day breakout to the upside for the DAX, just finding some resistance towards 10,450 and also the 50-day moving average. We'll have to see whether that is broken for the rest of the day, but this market ordinarily should have been much weaker, maybe by 100 or 200 points at this stage after that gap to the downside earlier this month. On to the US markets, and for the Dow, really in a consolidation pattern. We did gap down through the 50-day moving average 18,437, gaps down through the 50-day line, normally very strong sell signals, and therefore that's slightly at odds with where the market is at the moment, relatively firm. Obviously, the easiest thing to do here is to wait either for a break through 18,300, which has been recent resistance, and 18,000, and follow the move from there. But we do have, obviously, the Fed with its news on Wednesday evening, and that will clearly be the decider on that. As things stand on a technical basis, the message is down rather than up. For the S&P, we've also got that strange consolidation. Initial failure at the 10-day moving average, 21.51, and below that, really heading back towards, one would assume, heading back towards the 21.20 level, which is the May uptrend channel support line. End of day close back below that, could see a return back down towards the 200-day moving average at 20.58 over the next few weeks. Next market is the one which is the strongest out of the big three in the US, basically the Nasdaq 100. Here, but even here, we've seen pullback from the best levels, so that's towards the 48.30, 48.40 level, 48.43, the intraday peak there, so a bit of a bull trap type of move. That may be worth noting in the sense that support initially comes in at 47.40 at the 50-day moving average. Onto the currencies, and say it's still a bit surprising that cable is that weak at the moment. Almost assuming that it's almost as if it's assuming that the Fed will do something in terms of making the interest rates or raising rates over the next 24 hours. At least while we're below the 50-day moving average at 131.60, there is a risk of a retest of that post-Brexit low at 127.98. Onto the euro, and that was pretty dead even before the market slowdown ahead of the central bank news. Support here 111.47 at the 200-day moving average, resistance around 113, and really waiting for a break of those two parameters. For the dollar yen, which is probably the market one would expect will do the most over the next 24 hours, or 24 to 36 hours rather. Here we've got a triangle, it's just about to be broken around 101.50. 101.50 is the support line there from August, 103 the resistance, so it looks as though the 50-day moving average at 102.66 will drag this market down to a sub 100 level target over the next week or so. Finishing off with gold, and clearly interest rate sensitive here. But so far holding up above the 1300 level and actually right on this uptrend line from the beginning of the year, nominally at 1310. While there's no end of day close back below that, one would have to give this market the benefit of the doubt, even though really we need to see a break back above the 50-day moving average at 1332 before getting too excited about any new leg to the upside. That's it from me. More updates at the same time tomorrow.